Hi everyone, Tai Zhi here, CIO of Auto Wealth. In this video, we are going to look at how to navigate your investments for the month of June. There's a popular saying in the investment world, sell in May and go away. If you have not heard of this, it means to sell and avoid investing in May. This saying originates from the belief that historically, the months of November to April generate significantly better returns than the months of May to October. However, is this phenomenon really true? Let's look at the actual market data. I have compiled the data from Bloomberg. This chart shows the MSCI All Country World Index, the benchmark index of global stocks. In the last 30 years, excluding the years with major market crises, global stocks appreciated in May 68.2% of the time. May is traditionally the peak season of first quarter corporate earnings release. By the end of April this year, 26.4% of S&P 500 companies reported earnings that grew 53.7% year-on-year on average. From a corporate earnings perspective, global stocks are likely to receive good support. That said, we also found that in all years when global stocks declined in May, global stocks appreciated strongly in April, the immediate 1 month before the decline. Therefore, the May declines were plausibly a consolidation from the preceding run-up. Global stocks appreciated 4.4% in April this year, primarily due to good corporate earnings and Biden's fiscal policies. Did global stocks actually decline in May this year? Well, as of 31st May this year, global stocks remain positive with about 1% return. Although it was likely that May was going to decline, the results end up being positive. This shows us historical data can let us know what is likely to happen, but it cannot predict the future for certain. Now that we have seen what happened in May, let us take a look at what happened next in June. Here's the last 30 years of global stock market returns for May and June. May in blue, June in grey. You will notice that whenever there is a material market decline in May, it would follow by a strong market rebound in June. This happened in 1991, 1999, 2006, and 2019. On the flip side, if there is major market growth in May, it might follow with a decline in June. After analyzing the trend from May to June over the last 30 years, is selling your investments in the second half of the year still a good idea? Indeed, there is no need to panic as equity markets will inevitably go through corrections, be it in May or other periods of the year. As long as we stay invested and actively manage our risks, markets will eventually recover and generate good returns for you. As a reference point, our risk-free Auto Wealth balanced portfolio of 60% stocks, 40% government bonds generated net returns of 28.8% or an arithmetic average return of 9.6% per annum, despite the market volatility arising from the US-China trade war in 2018 and the COVID sell-off in 2020. All you need to do is to stay cool, stay invested, and let Auto Wealth do all the work for you. That's why our corporate tagline is a simpler, better life. Let us watch after the market fluctuations on your behalf while you grow your investments with a peace of mind. If you enjoyed this video, please like the video and let me know what topics you would like me to cover in the comment section below. Till then,